You ever get that feeling, like when a company looks amazing, like on paper, but deep down something just feels off?
Like it's too good to be true.
Yeah, exactly.
Uh-huh.
That's exactly what we're going to be looking at today.
That's what we're diving into today.
We're doing a deep dive into E.L.F. Cosmetics.
E.L.F. Cosmetics, they're huge in the beauty world, right?
Yeah.
Known for their super affordable products.
Mm-hmm.
And get this, their stock.
Yeah.
It's been crushing it.
I know.
Even beating out big names like NVIDIA.
It's crazy.
On the surface, it seems like, wow, total success story.
Total success, yeah.
Yeah.
But
Yeah, but here's the thing.
here's where it gets interesting.
We started digging into some of their import data, and we actually talked to some of their suppliers.
Yeah, and some serious red flags started popping up.
Yeah, and it's interesting because, like I said, on the surface, they look great.
Maybe do.
But what we're seeing is this weird disconnect.
A disconnect between, like, what E.L.F. is reporting as their revenue and then what's actually happening in their day-to-day operations.
Like their imports.
And specifically, their imports from China.
Right, exactly.
Because that's where they get the majority of their products.
Something like 80% of their products come from China.
So when we see a change in those imports, a pretty drastic one,
Yeah.
that's something to look at.
Yeah, break it down for me. Like, how big of a change are we talking?
A huge change.
Huge.
So we're looking at a 67% plunge.
67%.
67% plunge in imports.
Wow.
In just the last quarter
of
their fiscal year 2024.
That is massive, especially for a company in the beauty industry, right?
Huge.
Everything moves so fast.
Pace.
They're constantly coming out with new products.
Gotta have a finely tuned supply chain
Yeah.
to make all that work.
Yeah, you would think with a 67% drop in imports.
Yeah, you think their business is like...
shrinking.
Yeah, or at least hurting.
Yeah, for sure.
But that's not the case.
Not at all.
It's actually the opposite.
This is the mind-boggling part, right? At the same time as this huge import drop, E.L.F. is saying that their revenue actually went up.
Increased. A slight increase.
How is that even possible?
Right. Like, fewer products coming in should mean less revenue.
Exactly.
But there's more.
There's more.
Their inventory levels also went up during this time.
So hold on. Fewer imports.
Fewer imports.
More revenue.
More revenue.
And more inventory.
More inventory.
It's like breaking the laws of economics.
It makes no sense.
It really doesn't.
So if they're bringing in less product, how are they selling more and still have more left over?
Right.
Like, what's the deal?
It's incredibly perplexing.
Yeah, I'm starting to get that feeling that, like, something's not adding up.
That feeling we were talking about earlier?
Yeah, so is there any, like, logical explanation for this?
Well, there's one theory floating around.
Okay.
What if E.L.F. drastically increased the value of their products per kilogram?
So instead of shipping, like, tons of, I don't know, like, cheap lipsticks or whatever,
Yeah.
they've shifted to smaller quantities of, like, higher-end stuff.
Right, exactly. Maybe they've gone from drugstore chic to luxury spa,
Like, overnight.
Yeah.
Interesting.
But when you look at the data, that explanation kind of falls apart.
Yeah, how so?
Well, historically, their average value per kilogram has always been around, I don't know, $18 to $21.
Okay.
To make their numbers work, now with this huge import drop, that value would have to skyrocket to like $52 per kilogram.
Whoa.
That's a huge jump.
Yeah, it's a little hard to believe unless they, I don't know, discovered some miracle anti-aging cream that's, like, worth its weight in gold or something.
Exactly, and that's why analysts decided to go straight to the source.
Okay.
They talked to E.L.F.'s top suppliers in China.
Really?
Yeah, 3 out of their 4 biggest suppliers.
Whoa. They went behind the scenes to talk to the suppliers.
They did.
That's some serious investigative work.
And these suppliers, they account for over 50% of E.L.F.'s imports.
Okay.
And they confirmed that E.L.F. has been ordering less in 2024. Yeah, so this basically validates that import data we were looking at earlier.
So the import drop is real.
Very real.
But what about the revenue increase and that weird inventory surplus?
Right.
Did the suppliers have any insight into that?
This is where it gets even more interesting.
Okay.
One supplier mentioned that E.L.F. potentially overordered back in 2023.
Overordered?
Yeah, which could explain why they're ordering less this year.
Okay, that makes sense.
But it doesn't really explain the revenue bump.
So are we saying that E.L.F. is, like, I don't know, intentionally misleading investors?
We can't say that for sure.
Okay.
But these discrepancies are definitely significant enough to warrant a deeper look.
Yeah, for sure. This is a lot to take
A
in.
lot to unpack.
We got this massive import drop, a
Yeah.
confusing revenue increase,
Mhm.
and this whole over-ordering thing. Like,
Yeah.
what does it all mean?
Well, based on this data,
Yeah.
analysts estimate that E.L.F. may have overstated their revenue
Hi.
by something like $130 to $180 million in just the past 3 quarters.
Wow, those are some big numbers.
Huge.
This is why I love a good deep dive.
It gets juicy.
The deeper we go, the more intriguing it gets.
It really does.
All right, so we're back and we're picking up right where we left off.
Back in the world of E.L.F. Cosmetics.
Still trying to wrap our heads around this whole thing.
There's a weird disconnect between their stock performance.
Which has been stellar, by the way.
It has been.
And some of these underlying numbers that just don't seem to add up.
Right, we're talking about plunging imports,
Yeah.
rising revenue.
And a growing inventory.
It's a puzzle.
It's a real head scratcher. And you know what's really throwing me off?
What's that?
Those potential discrepancies in their reported revenue.
Right, we're talking potentially up to $180 million over the last 3 quarters.
That's a huge amount of money.
It is.
So let's say, hypothetically, these analysts are right.
Okay.
What would be the real-world consequences of a company overstating its revenue by that much?
Well, first of all, it's a major breach of trust because investors rely on accurate financial reporting to make good decisions.
Right.
If a company's numbers are unreliable,
Yeah.
it throws everything into question
So it's like you're building a house.
on a foundation of sand.
Yeah, it might look okay from the outside,
For a while.
but eventually the whole thing could just collapse.
Exactly. And the fallout,
Yeah.
it goes way beyond just investor confidence.
Oh, really?
There are potential legal and regulatory consequences to think about, too.
Like what?
Well, intentionally misrepresenting financial data can attract the attention of regulatory bodies like the SEC.
Oh, that's not good.
Not good at all. We could be talking about serious fines, investigations, even lawsuits.
So this isn't just like some accounting oops, this is potentially misleading investors.
And possibly breaking the law.
Yeah, that's a big deal.
It is. For E.L.F., the fallout could be pretty massive.
In what way?
Well, their stock price could plummet.
Right.
They could get hit with a wave of lawsuits from angry shareholders. And their brand reputation, which they've worked so hard to build,
Yeah.
could be severely damaged.
So this is starting to sound pretty bleak.
It is.
Is there any chance that there's a more innocent explanation for all of this?
There's always a chance.
Okay.
It's possible that E.L.F. has legitimate reasons for these discrepancies
Okay.
that haven't been made public yet.
Like what?
Maybe there are unique factors in their supply chain, or perhaps they've made strategic changes to their business model.
Like that?
Maybe they've pivoted to a different product mix,
Okay.
or they're sourcing materials from new suppliers.
Yeah, I guess that's possible.
However, until E.L.F. addresses these concerns transparently
Yeah.
and provides a clear explanation, those doubts are going to linger.
So it's like this big cloud of uncertainty hanging over the company.
A cloud that could be very damaging to
Yes.
both the company and its investors.
It seems like this case is a good reminder. The
Yeah.
importance of due diligence, you know?
Absolutely.
And looking beyond the surface.
Don't just skim the headlines.
Yeah.
You got to dig deeper, look for inconsistencies,
Yeah.
connect the dots.
Yeah, it's like being a detective.
Exactly.
So don't just take their word for it.
Verify, verify, verify.
This is all fascinating stuff.
It is.
But I gotta admit, it's also kind of overwhelming.
How so?
How can the average investor, like someone who doesn't have a team of analysts,
Yeah.
even begin to do this kind of research?
That's a great question, and that's something we're going to delve into in part 3.
Awesome. I'm excited to hear more about that. Welcome back to the deep dive. You know, we've spent the last 2 parts really kind of digging into this whole E.L.F. cosmetics situation.
Trying to figure out what's really going on with their financials.
Yeah, because remember, on one hand, they look like they're killing it.
Stock performance is through the roof.
Exactly. But then on the other hand, we've got these red flags.
The import data, the supplier conversations.
The weird inventory thing.
It's a lot to process.
It really is. And, you know, last time we were talking about how everyday investors can protect themselves.
How they can learn to spot these kinds of red flags.
Because let's be real, most of us don't have a team of analysts at our disposal.
Definitely not.
So it can feel kind of daunting.
It can, but it doesn't have to be overwhelming.
So where do we start?
All right, well, first things first. Don't just rely on headlines or press releases.
Yeah, those can be super misleading.
They're often designed to paint a rosy picture.
Right. So we got to go deeper.
Exactly. Look for in-depth analysis from reputable sources.
Okay.
Independent research firms, financial publications known for good investigative journalism.
So we're talking about going beyond the hype,
Beyond the surface level stuff,
getting into the nitty-gritty.
exactly.
Okay, what else?
Don't be afraid to get your hands a little dirty.
What do you mean by that?
Public companies have to file detailed reports with the SEC.
Right.
These filings can be gold mines of information.
Really?
They often reveal way more than just the top-line numbers.
So we're doing some digging, we're reading between the lines. What kind of red flags should we be looking for specifically?
Good question. Keep an eye out for anything that seems too good to be true.
Especially in this market.
Especially now, if a company's growth is way outpacing its competitors,
Okay.
or if its profit margins seem unusually high, that's a sign to dig a little deeper.
It's like trusting your gut, right?
Trust that nagging feeling that something's not quite adding up.
I like that. And remember, you don't have to do this alone.
There are tons of resources available online.
Right.
Investor forums, financial blogs, even social media can be helpful.
Really? Social media.
Sometimes just seeing what other investors are saying can give you a different perspective.
So it's like crowdsourcing your due diligence.
Exactly, tapping into the collective wisdom of the investment community.
Love that. And any final words of advice?
Diversification is your best friend.
Oh, that's a classic.
It's a classic for a reason.
Yeah.
Don't put all your eggs in one basket.
Smart.
Spread your investments across different asset classes and sectors.
So if one investment goes south,
It won't wipe out your whole portfolio.
solid advice. It feels like this whole E.L.F. situation has really highlighted something important.
What's that?
Even in today's world of like instant information, true transparency can still be elusive.
Absolutely.
And it's a call to action for all of us.
To be more vigilant, ask tough questions, demand accountability from the companies we invest in.
Well said. This deep dive has been a real eye-opener.
It has.
From affordable makeup to potential financial mysteries, it just goes to show.
There's always more than meets the eye.
I love that. That's what makes investing so fascinating.
The constant learning, the critical thinking, the pursuit of a deeper understanding.
Couldn't said it better myself. We hope you enjoyed this episode of The Deep Dive, and remember, knowledge is power.
Keep asking questions, keep exploring, keep diving deep.
Until next time.